Alright, good morning then folks, as we are at the beginning of another week of trading. Now we'll have a look across markets, flick across the calendar and see what we are expecting over the course of this week. If we just have a look quickly back at the charts though, you can see US dollar 11th straight week of gains last week, and I mean, it's hard to see that changing unless the economic data this week comes in all negative, but we'll have a look at that a little bit later on in a couple of minutes. But I mean, the trend is firmly still intact across all these. You see euro, dollar, cable still pushing lower. You can see dollar Swiss, dollar yen both pushing higher aggressively. Obviously that then drags the dollar index with it. The Aussie and the Kiwi have kind of been chopping a little bit sideways for about a month now at this stage, so a bit of underlying strength in the Australian dollar, Kiwi dollar, which is somewhat surprising to be honest, but it is what it is. The dollar CAD had a fresh attempt higher on Friday due to a bit of a pullback in oil prices, but the Canadian dollar has largely been supported by rising oil prices, apart from obviously this run, which you can see here from first 2-3 weeks of August, which was just broad-based US dollar strength no matter where you looked, driven largely by rising yields, increasing bond yield. The yields on bonds 10-year, 2-year across the curve continues to trend higher, and the trend again in that respect is still firmly intact. Interest rates expected to be higher for longer and to potentially even go higher again in by year end. So these continuing to trend higher keeps the dollar supported and keeps stocks under pressure. As you can see, the S&P, the Dow Jones, the Nasdaq and the Russell all continue on with their downtrends. The DAX and the Euro stocks all both continue lower as well. More so off the you see the US stock index is trending higher with yields trending higher, trending lower with yields trending higher, and the dollar trending higher with it. That is largely due to interest rates expected to remain higher for longer and potential for interest rates to go even further higher by year end. Difference with the Eurozone is you have to imagine the ECB are done with their interest rate hiking cycle, but their economy is certainly not in the same position as the US economy is still okay, is still printing good numbers. Economic data continues to remain positive in the US. Very different story in Europe. The DAX and Euro stocks continue to sell off, not managing to gather any sort of upside off the back of the interest rate hiking cycle concluding or seemingly concluding. Therefore, that is not a good thing. You've come back, you've broken through these support levels, you come back to retest these support levels now as resistance across a couple of these assets. You can see the DAX in across here, which is an interesting level for me this week. You look at the Euro stocks over here, which again is an interesting level. As long as we can remain below them, you'd have to imagine downside in European stocks persist. Look at the S&P 500, this level across here, which is your neckline of this head and shoulders that we did look at a while back, continues to be tested at the moment. Do we hold below there, and do stocks continue lower? That is the question for this week. And you can see the Dow Jones through the lows last week, you can see the Nasdaq through these lows last week, and then the Russell pretty clear head and shoulders on that, broke through it and then continued lower. Not massive downside over the course of last week. Some economic data kind of a little bit jittery last week, but in the bigger picture, it continues to be somewhat positive. But trend still intact across a lot of these. Longer term trend on bond yields still higher, dollar trend still higher, equities trends still lower, and the trend is your friend. And then you got to look for things that can dispute that trend. Obviously, naturally, you get pullbacks, you get moves against the trend, but all in all, unless you get some clear-cut reason for that trend shifting or that trend changing, you have to continue to go with it. You then look towards the economic data for the week, where you've got the manufacturing PMI out of the US, where we are expecting an 11th straight month below, or 11 consecutive month below that 50 level. So the consensus is for it to tick up slightly higher. If you just have a look at these numbers though, the manufacturing side of things, the last figures you can see back in August, actual 47.6. You're expecting 47.7 this time. That comes in slightly above. Now you can see a couple of months in a row from June, July and August has started to pick up again and trend a little bit higher, certainly on the manufacturing side of things, which again is a positive for the US economy. Job openings expected to tick higher. Now job openings is normally a pretty good front runner for the unemployment rate, so if job openings continue to push higher, which we're expecting, the consensus 8.83, previous 8.827, so now what's that? It's a small tick up, not exactly a massive amount, but is still expected to tick up slightly, even though that has been trending lower. So if that does start to trend higher, now it's a pretty good front runner for the unemployment rate, but that has been trending lower in recent months. Therefore, you're going to have to expect the unemployment rate to be okay, where you can see consensus 3.7%, so expect to be a tick down from that 3.8% that we saw in the previous print. Now, that can be down to kind of summer jobs for people coming out of summer jobs, so not a massive deal. The fact that that ticked higher, the unemployment rate remains relatively stable. I mean, it goes to 3.7, 3.6, 3.5. The pop higher in August, again, as I said, maybe people going back to university or college, they refer to it as in the US. A lot of people will get jobs over the summer and then go back to college. They've obviously got to leave those jobs towards the end of summer. That can be a reason for the unemployment rate ticking up slightly. So you're expecting that to come back down again. Non-farm payrolls, you're not expecting to be great at 163,000. Not exactly a massive number, but if you can get a bit higher, going from 105 to 157 to 187, it has been trending higher slightly. Maybe if you can beat some consensus and get it up towards 200k, that'd be a reason for some fresh dollar upside. So economic data not expected to be too bad across the US over the course of this week. If that all comes out in line, it's not really a reason as to why the US dollar should turn around. So something to keep an eye on, definitely the US data over the course of this week. You got the RBA, 3 months in a row. They have not hiked interest rates, so they have held interest rates firm. That's what we're expecting again in today or in tomorrow's overnight session. So tonight into tomorrow morning, 4:30 a.m. you're expecting the new interest rate decision. First meeting since they have their new governor. So no more Philip Lowe. You get a bit of an indication as to how the new regime may work going forward. So not too much to be expected, or not too much of an indication as to what to expect. You'd have to imagine they stick largely to the same script, though. Do not hike interest rates, but we'll get an idea of how they feel moving forward. Into the new regime. Consensus 4.1, previous 4.1. That'll be 4 months in a row. No interest rate hikes. Likely to probably still leave the door open to further interest rate hikes, but barring any higher spike in inflation or any aggressive spike in inflation, I have to imagine that their interest rate cycle is concluded, or certainly the hiking cycle is concluded. A bit of Australian dollar strength over the last kind of month or two. Yeah, we'll have to see what they say coming into that, but I have to imagine they do push back on. I mean, they won't want to say that they're not gonna hike interest rates anymore. They probably won't want to spark a rally, but in their assets, in stocks, for example, they also won't want to cause too much volatility in the currency when they're probably pretty unsure as to what they want to do going forward. So interest rates remain steady at 4.1%. Yeah, really, I'm kind of just waffling now a little bit, as there's not much to see there, you would have to imagine, in tonight's overnight session. Apart from that, you do have Canadian unemployment expected to tick up slightly. If you have a look, it has been trending higher over recent months. If you look back to kind of May, June, July, August, has been trending higher. Held steady in August from July, expected to tick up 5.6% again. That's not a situation where the Bank of Canada are going to continue to look at hiking interest rates as the unemployment rate rises. So if that does tick up slightly, probably expect a bit of Canadian dollar weakness in the back end of this week. Not a majorly busy economic calendar over the course of the week. No European high impact data, no UK high impact data. Mainly we've got to focus on the US over the course of this week. Manufacturing PMI today, job openings tomorrow, services PMI on Wednesday, and into NFP on Friday. So the US dollar, US stocks and US bonds will be the main focus of attention this week. That's our thoughts on what to expect. Maybe potentially US dollar strength to continue unless we get something else to dispute that.